Welcome back to the channel, guys. I'm your host, Buck Ning, and today we're going to talk about what to do in the bear market, in a bear market, not the bear market, a bear market, or a upcoming bear market, or a bear market. That makes sense? Good. So if you're new to the channel, welcome. This is where we put $100 a week into a tax-free savings account to build a dividend portfolio right in front of your eyes. And if you're not new, welcome back. So as you can see here, it's 11 o'clock where I am. It is late. It's past my bedtime. But we're going to go through the portfolio. We're going to talk about what to do in a bear market, in the bear market, in an upcoming bear market, any kind of bear market. And we're going to talk about how it's not actually that bad. And you got to go with kind of like your logic and not your gut, your emotional gut. So before we do that, we will get into the portfolio here. On the day here, the portfolio closed out at $12,065.16. As you can see, there's a big jump from what we had last week, and that's because we were finally able to transfer that amount from the referral link, which is down below in the description. That Facebook stock that we got, or Meta, also known, we transferred in here. And we're going to use that to make a purchase this Friday. So as you can see today, we're down $121.24, down 0.99%. For the 1 year, we're up 68, or it's not the 1 year, 1 week, we're up $68.07, up 0.57% on the week. For the 1 month, we're down $401.59, down 3.22%. For the 3 months, we are down $624.39, down 4.92%. For the 1 year, here it comes, we're up $798.58, up 7.09%. And for the all, we're up $1,573.18, up 14.99%. As you can see here, we now have $393.12 in the cash account. So let's talk about the bear market. Currently, NASDAQ down like 20%, S&P 500 down somewhat of in the double digits range, and we're feeling it. And this is the opportunity. And don't get me wrong, because a lot of people are panicking right now. They are like, should I sell? Should I stay? Or should I go now? And the question is, if I keep on investing, well, for myself, if I keep on investing, what is the point if the market is just going to drop the next day another 5%? Not the market in general, but the stock pick that I pick, and then investing in something, and then it's down already, and then it's down again another 5%. That doesn't feel good. When a lot of investors are so used to just willy-nilly picking a stock all the way to financial freedom for the past like 2 years. And so I think it's safe to say that, I don't think this is the end of it. I think there's going to be more to come for the rest of the year in the market, where when you invest in a company, you might see it go down the next day another 5%. And that's going to be the norm. And it's the harsh reality of investing, especially in times like this. And emotionally in our gut, we feel kind of the pain for a lot of investors when it comes to these sort of bear markets. But as experience has come, and in the years of investing that I have done, any type of bear market, it's always been said that these are the best times to make most of your money, or make most of your capital returns or gains in a bear market. Because a bear market is relatively short-lived for what I've seen so far. I mean, the last bear market was like 2020 for us. The sharp drop, or a correction, if you want to call it that. And then another one was probably 2018. Was it 2018? I think there was a little bit of a correction there. But bear markets are the time where you want to deploy your cash in as much as you possibly can, because bear markets, like I said, are relatively short-lived, and there's an average usually, and an average is all the numbers compiled together, and giving you the average between all those numbers. And a bear market typically, on average, will be down 33%. For the most part, and it only lasts about, on average, 14 months. So about a year and 2 months on average. Okay, there are some that lasted longer than that, like a year and a half, and so on and so forth. But on average, not the median, the average, down 33%, 14 months in a bear market. Do you want to know the average for a bull market? It's about 263% return, not negative, positive 263%. And it lasts on average, a bull market, 71%. So in these times where we're kind of uncertain of what's going on, and we're kind of feeling the pain of inflation, of this market downturn, as I'd call it, we don't know what to do because we're losing money left and right. And we may not be seeing it physically compared to inflation, but you will notice it in the cost of living, the cost of goods going up. And there's a lot of factors that play into that. But it distracts us from what's going on in the marketplace, because if you're an investor or you're in the market, it's tough to deploy any kind of money in times like this when you know maybe the next day is probably going to be down again. Although today was a pretty good day, in my opinion, for me, myself. I don't know about others, but I think it's true. Most of your wealth will be built in the times of bear markets. Because if you're buying at the high, top of the market, and it goes all the way down to the bottom of the market, it's not going to feel good. And it's going to take some time, maybe a longer time, for someone like who bought at the top of the market and just left it there. It's going to take them a longer time to recover, to get back to that high, than somebody who does a strategy of dollar cost averaging, because they're buying all the way down and they're buying all the way up. And it gives them the average between the two, top and the bottom. And it's not as much as someone may have bought all the way down at the bottom, but it gives you that average between the two, which is still better than buying all the way at the top and waiting longer for it to come back when it's dropped so far. And so again, bear markets are short-lived. Volatility is there in the market. We know that. We've experienced that for a while. I mean, the top of the market was like November for a lot of people, November of 2021. And again, let me give you those numbers again. A bear market is short-lived. On average, it's down about 33%. So I think we still have a ways to go when it comes to a bear market. And it only lasts about 14 months on average. I know there's some that lasted longer than that, but an average, remember, I'm just talking about averages. And bull markets on average give you 263% return, and they last about 71 months. I know the last one lasted much longer than that. It's probably close to 10 years of a bull market, and little corrections on the way. But it was a great decade for a lot of investors, and especially the last couple of years there. And so this is just, I think, reality for a lot of people. This is reality for a lot of people that willy-nilly went and picked stocks in a time where you could pick anything and you'd be making gains on that investment. But now you really got to start thinking what positions can I look at, what companies are operating at a cash flow positive, free cash flow basis and not losing money, and how many companies are sustaining and which companies are sustaining and continuing growth even through these times, because those are the companies that really have their business put together. It's an established company. It's not worried about any kind of interest rate hikes, although all companies are, as of course, if they're a smart company, if it goes up, pay off the debt if you can. And that's what we look for. And so if you have the cash, I say deploy it. I know that's what I'm going to do. Now, this is not financial advice, but I think if we say what we believe, or if we believe what we say, if we believe what we say, as everyone would say, just buy the dip, I'm going to buy low, sell high, blah, blah, blah. Because it really does get tedious and cliche after a while. But they are true, because they are principles in most cases. If you're true to those beliefs, then this is the time to do it and not sit on the sidelines. Because if you're sitting on the sidelines, you're just missing out. And so what if it goes down another 5%? It'll come back. As we know, markets tend to come back. I've never seen it where the market goes down and just shuts down in my lifetime anyways. And we might, I don't know. I couldn't tell you, but I don't know if this is truly the bottom of the market, because a lot of people are saying that it is, from what I've seen, based off headlines and stuff like that. But I don't think it is. I think there's more to come when it comes to the market trending downwards more and more. And if you're planning on timing the market, it's just not going to happen. We don't know. The honest, true answer is we don't know if the market will continue dropping or recover from this or do whatever it wants. We don't know. And don't pretend like you do know. To be honest with you, don't be that person who's looking at charts and does that, those like stupid TikToks. Okay. Don't be that person, because I don't think it's an accurate reflection of what's actually going on. Nobody can tell the future. If they could tell exactly how the market was going to operate, don't you think that everyone would be doing it? Don't you think everyone would be wealthy? Don't you think that you wouldn't be watching this video in order to do all that stuff, right? If we knew based off graphs and candlesticks. Remember, 98% of day traders lose money, okay? 98 or 95%, whatever it is. So for us though, if you're watching this channel, I'd imagine that you have probably a dividend portfolio. And in times of volatility, a bigger dividend portfolio you have typically withstands these times of let's call it turmoil, these times of downturn, these times of volatility, these times of where negative news does affect the market in a bad way. And everyone's kind of like, maybe we should sell. Honestly, in my opinion, not financial advice, just don't sell, hold, and try to deploy as much cash as you can, because think of the forward returns that you're going to get from that. If the market recovers, you were buying all the way down and then now you're getting all these gains. It's fun to buy when it's going up, but it's also fun to buy on the way down as long as you have the cash to deploy. And so, and if you're being logical and you're believing what you say, like buy the dip, I always buy low and I sell high. Well, I never sell, I just hold. Okay. And so that's pretty much it for the video, guys. It was a little bit of rant. I don't know if you took anything out of it. Thought I'd make a little quick video. It's late. And I apologize. I apologize that this video may not make sense, but hopefully it does. It's coming from a person who's normal. I don't even know if I'm normal. I'm not the person that's going to pretend that I know it all, give you facts on, not like fake facts, but give you facts based on what's on the internet or what's on the headlines. This is me if I was talking to a friend, okay? This is me talking to a friend about the market, and it's not all this candle's down. If you look at the shoulders of the graph, you can predict what's going to happen with this stock. No, that's not it. If you're watching this video and you don't enjoy it, then there's something wrong with you, because this is how normal people talk. Typically, I would find they're not. In the market today, the market is down 10%, and I think we should sell what you have and just get back in later. I'm not Jim Cramer, okay? I'm just a regular dude who's on YouTube making a video, hopefully hoping that you can relate to somebody that just talks normal and doesn't talk like a robot, or doesn't talk like he owns a hedge fund when he works at a 9-to-5, okay? I'm not some sort of professional advisor. I'm not that person. I'm just sharing my opinion, being a normal person, and I'm not like some Warren Buffett fanboy who quotes everything he says. Okay, I'm just Buck Ning, building a dividend portfolio right in front of your eyes, $100 a week. That's it. Showing you guys the journey, showing you guys the performance of the portfolio, the gains in the portfolio, everything. I'm being as transparent as I can be. And so, other than that, guys, enjoy your week. Do what you got to do. Remember, this is not financial advice. Don't forget to leave a like and subscribe, and we'll see you in the next one. Bye.